Hi guys, a very good morning to you all who are joining us live on this broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. Let me quickly take you through where we left off trade yesterday. And well, we did see the Nifty failing to see that follow through really and breaking to those prior lows, not managing to hold on to those 24,400 levels that it had, closed the previous session down to about 24,200 levels. But it would be too early rather to judge if we are in that pullback phase already, because today the handover that we're getting seems quite positive in that sense, right, from Wall Street as well as even the Asian indices that are trading quite higher. So the Nifty right now around its 20-day daily moving average, so that would perhaps be that crucial support level. 23,887 is what the 20-day DMA is, and that could be that downside level that you need to watch out for in case it does see further selling pressure today. And for the Bank Nifty too, it is trading close to that 20-day DMA of about 51,907. So these are the levels that seem interesting to watch right now, but the cues are rather positive. The Gift Nifty also indicating a good positive start. So a whole host of stocks that we will get discussing as well with our experts on the show. But before that, let me take you through all the top headlines. The record run continues on Wall Street that was fueled by tech stocks and rate cut hopes. Now the S&P 500 and Nasdaq both gained over 1% to close at record high levels ahead of the release of CPI numbers for the month of June, which will come out later today. Asian markets are also trading largely higher following a strong handover from Wall Street. The Japanese Nikkei has hit an all-time high, trading above the 42,000 levels, while the Gift Nifty is also suggesting a higher start for the Indian equity markets. Crude prices have risen marginally. Brent crude trades around that $85 a barrel as U.S. inventory has seen a bit of a blip. Gold prices, meanwhile, have risen on expectations of a rate cut by the U.S. Federal Reserve. And the earnings season officially kicks off with IT bellwether TCS set to report its first quarter numbers after market hours today. The street is expecting growth to be higher than it was seen in the past 5 quarters, while margins may come under pressure due to the wage hikes. 10 minutes to go there on your clock, and we'll know whether we are going to be succumbing to further pressure or selling profit booking that we saw at least in the last bit of trade yesterday. But if you look at the setup, really, we did see the Sensex falling by about 427 points below that 80,000 level. So where it closed off was 79,925. The Nifty also about 100 points lower to close in at 24,324. Where you have the mid-cap index really, which saw almost a 1,200 point swing in intraday trade, but also made that biggest comeback, you could say, its recovery that was seen last on June 5th, when we saw a lot of trade, pretty much the market stumble on June 4th, and that's when we also saw the mid-cap index play this kind of recovery what we saw yesterday. Now M&M, of course, was that biggest drag, 7% that we saw, that countered down, that because it reduced its SUV prices, but this remembers the record biggest single day fall for this counter in 4 years. We also saw a lot of traction among life insurance companies, which rose on the back of reports that the term premium could likely be hiked, or they would be taking these hikes on term premiums. Most of these stocks within this space, in the life insurance space, saw good 2 to 3% rally in yesterday's trade. But of course, the market breadth then didn't turn in favor of the declines, and we had the advanced decline ratio of 1:2. So that's where we left off yesterday's trade. But if you look at the option cues, your Nifty PCR dropped yesterday to about 0.97 from the 1.28 levels. And remember, if it goes below 0.7 levels, that's when we say that bearish sentiment really kicking in. But right now, we are a little off that guard. So we are at 0.97, where the PCR, or the put call ratio, really stands at. but a couple of stocks that have been added into the F&O ban. One really, that is RBL Bank, that has been added into this list, whereas you have a whole host of others like Aditya Birla Fashion and Retail, Balrampur Chini, Bandhan Bank, Chambal Fertilizers, GNFC, IEX, India Cement, Piramal Enterprise that continue in this F&O ban list for today. In terms of the fund flows, well, yesterday it was we did see a lot of selling activity, but net the domestic institutional investors at least ended up buying 1,082.40 crore worth of equity in the cash markets, whereas FIIs also did some bit of buying, just about 583.96 crore worth of equities that were bought by FIIs. Now, if you look at the VIX, or the India Volatility Index, that one continues to rise. In fact, for the third straight session that we saw a rise of about 1.07%, now around that 14.43 levels versus the 14.28 levels. So we are seeing that VIX index continue to see volatility, and perhaps will be in that range till the general budget that will come out on the 23rd of July. But let's get discussing what kind of stocks that we could expect, and also the kind of strategies you could use in this kind of volatile environment where you are seeing higher highs, but you're also seeing that bit of correction and consolidation. So is this really that buy on dips kind of strategy that one is supposed to be adopting when you're seeing these newer highs? Let's ask our technical expert, Kunal Rambhia. He's a fund manager at the streets. Thanks so much, Kunal, for giving us your time and speaking with us here at Moneycontrol. But we've been talking about, how the markets have been behaving. And if you just look at the benchmark indices, we've been seeing newer highs, and of course there are those days in between. Pretty much every week, if you take for that matter, we've been seeing some days of consolidation there. But can we really say that we are headed towards a pullback, at least before the budget? Is that what the charts would be suggesting?
Morning, Stacy. Thank you so much for having me on the show. It's always great to begin the day with coffee and Moneycontrol before market hours actually. So if we specifically look at the Nifty, it's been almost 11 calendar days and 7 to 8 trading sessions. That's the beginning of July. The support on the chart is somewhere at around 24,150, and in this last 7 to 8 trading sessions, I think 3 times Nifty has retested that particular level. And on the higher side, we have 24,450 as a resistance mark. It's been in the consolidation zone. As you rightly said, yeah, there seems to be likely pullback. But at the same time, we should not forget that, there is a time correction which is ongoing. Indices have been in the range itself for last 10 to 8 days trading sessions. I think on the lower side, 24,150 can be a good support where one can think of initiating a buy. And similar strategy can be adopted even for Bank Nifty. I think buy on dip can be a good strategy here, and the stock specific moves are likely to continue.
I think today the big focus is, of course, going to be TCS. That's because we are looking forward to its Q1 earnings. Now, the key expectation is that perhaps margins will be under some bit of pressure, about 150 basis points, and this due to the wage hikes that it took effective April 1st. They're also likely to see a because of that 0.5% rupee depreciation that we've seen, that could offset this wage hike loss impact if that really turns out. But if you look at what our sister network CNBC TV 18 is penciling in terms of their poll, they see that the profit after tax perhaps will come in at 11,989 crores versus that 12,462 crore rupees according to their poll. So this is a tad bit lower, about 3.8% lower is where they're putting that profit after tax number. But of course, what we could expect are that the total contract value, or the TCVs that we really look into, that could also be a slightly lower, because there haven't been any mega deals in this quarter. In fact, the deal closure for Q1 FY25, they did go on to sign deals with Xerox as well as Bergman Bank, but that not really showing into these numbers, and which is why we're expecting that TCV value to be lower this time around. What you could watch out for though is their outlook on their discretionary demand as well as hiring, especially in terms of the generative AI space and also the competition from their global captive center. So this is something that you can watch out for when it comes to TCS's earnings, and of course we'll be getting you the management and also how this really transpires. But Kunal, quickly to you know, not just TCS, because we're kicking off with the IT pack earnings, but the fact that, you know, even the Federal Reserve Chairman Powell yesterday went on to say that he is seeing labor markets cool off there in the United States, which gives them more, you know, hopes of that rate cut actually happening sometime in September. How are you looking at IT stocks and also TCS particularly? Are the charts looking fine for this one?
So as you rightly mentioned, Stacy, in fact, the markets, I think markets discounted this particular event and incidents well in advance. And if you look at the behavior of TCS from March 2024 so far, it's not able to surpass the levels of 4,025, 4,030. In fact, last 7 to 8 days, we were just waiting for that breakout to turn up. But yeah, it was a failure. And yesterday we saw a good bit of, you know, profit booking, and the counter was down by 2%. So there are two levels which we are watching out for TCS particularly. And the higher side level is 4,025, 4,030. That's a strong resistance. And on the lower side, it's going to be 3,775 to 3,800 mark. It's going to be a buy on dip strategy which we'll adopt for this counter. 3,750 to 3,800 can be the perfect entry for positional traders. I don't think this counter will enter into a downtrend anytime soon. That can be a good level to initiate by. 4,025, 4,030 can be a good exit level. If the counter manages to cross above 4,030, then we expect the levels of around 4,300 to 4,350 by end of the year. So this is the whole game plan, watching out for these two levels and accordingly planning the strategy.
Interesting. So you can watch out for TCS post its Q1 earnings. But talking about Tata companies, another one, Tata Elxsi put out its Q1 numbers last evening. We are seeing its net profits down by about 6.5%, coming in at 184.1 crore versus the 196.9 crore rupees that it recorded, at least on a Q-on-Q basis. Its revenues, though, are marginally higher, just at about 2.3% up, where it's coming in at 926.5 crore rupees versus 905 crore rupees. EBIT rather is down at just at 3.5% or so, whereas the margins too are slightly lower at 24.3% versus the 25.8%. Now, JP Morgan has come out with an underweight call on Tata Elxsi, and they've kept the target at 5,800 rupees per share. They do see that the Q1 is in line. They're seeing a beat on the adjusted margins, which is perhaps led by the delayed wage hikes. They're also seeing in terms of the constant currency growth, which is just of 2.5% or so, that has been driven on the back of their transportation business. And this bounce back that you're seeing in the transportation has been led by the big, large deals finally having ramped up. So we are going to see some kind of action in this particular stock. That's Tata Elxsi, and where that one stands in terms of, a bit of the IT or ER&D that we say really at play at this one. But we will have to see what really transpires when the stock opens. Another interesting stock to watch out for will be that of Glenmark Pharma, and we'll talk about it just a bit once we address market open there for you. Some bit of green that we are seeing this morning. So the Nifty 50 opening there just about 0.1%, but above that 24,300 levels that we closed. So about 50-60 points that we are seeing trade rather flat at this point, but the Sensex managing to climb back up onto those 80,000 levels. Remember, it closed below that one, so 0.2% of gain coming in there for the Sensex. The bank mid cap index and the small cap, the broader markets also yesterday also trying to hold out, where right now also we are seeing the mid cap index, even though it staged that recovery and managed to close in the positive yesterday after all of that selling that it saw during trade. You're seeing both the BSE small cap cap as well as the mid cap index both trade higher this morning. The bank index also quite interestingly, even though it has been seeing some major swings in the past 1 week, that index also seeing about 0.3% of gains. The bank Nifty also there in the positive this morning. But let's look at which components really are taking the markets higher and lower. Yesterday it was all about autos, and we saw what M&M did with those pretty much reverse all of its gains that it did in the previous session. Yesterday was not one of those days for M&M, but right now you're seeing the auto pack hold out in the positive, so you're seeing those names there in the positive. But let's pull up on your screen all the gainers as well as the ones building on the pressure, you could say, for the markets. But there you have it on your screen. Tata Steel, Hindalco as well as Titan among your top gainers. You do have the metal packs that are making their presence felt there. Asian Paints as well as JSW Steel among your top gainers. You also have Adani Enterprise, TCS managing to now hold out. Yesterday it did see and succumb to some bit of pressure, and we saw that profit booking ahead of its earnings, but today it has managed to gain rather. And you're also seeing SBI from among the PSU banking pack that is among your gainers. Let's also look at the flip side and see which ones are adding that pressure. M&M continuing to be among your laggards in trade. You also have ITC as well as HDFC Bank. So a good mix there. You have auto, FMCG as well as the banking stocks there among the laggards in trade. Eicher Motors as well as Bajaj Auto also among your laggards, though the auto index is still holding out even though it's seeing pressure come in from the likes of an Eicher Motor, M&M as well as Bajaj Auto. HDFC Life is another counter that is down and about after all that we heard from insurance companies, and like I told you, that term insurance hike is what these companies could go on to do, and which is why you're seeing them under pressure. Tata Consumers, Divi's Lab as well as Dr. Reddy's Laboratory from the Pharma pack is also among your laggards. But let's talk about the pharma stocks a little bit more. And just before markets could open, I was talking about Glenmark Pharma that is looking to exit Glenmark Life. Now this could of course be a positive for Glenmark Pharma, but not so much for Glenmark Life, because the parent or so is looking to exit completely and sell about 7.84% stake in Glenmark Life Sciences, and this would be via the offer for sale route. The floor price we're given to understand could be somewhere around 810 rupees per share, which means that it will come at a discount of a good 7% to the current market price. Remember, Glenmark Pharma is looking to offload somewhere close to 96.17 lakh shares. So this deal could then overall come out to somewhere around 779 crore rupees. And if you remember this stock, it was Glenmark Life was in making headlines too, because we saw Nirma go on to buy that 75% stake in Glenmark Life for that enterprise value of close to 7,500 crore rupees back in September of 2023. So interestingly, that counter is going to be something that you can keep on your radar. In fact, let me get Kunal back and get his view on Glenmark Pharma as well as Glenmark Life. Both of these, now there's more news coming into these particular counters, and also overall from the pharma pack. Today a couple of names there making it to the laggard list as well. How should one be reading what is happening within this space?
Stacy, overall the formation is very strong, and if you look at the trend, it's very much intact. If you look at let's take an example of Glenmark Pharma. Somewhere in the month of February, the count was near to 775, 800 kind of levels, and recently it made a high of 1400. Now that's a trending counter, right? So we should always be buying when there is a correction or say a bit of consolidation, so that the risk reward ratio turns favorable. On the Glenmark Pharma, the view is very clear. It's a buy on dip strategy which we can think of adopting. The levels what to watch out for will be 1275 to 1300. Not at this elevated level. Let the counter cool down a bit and let it come near to 1300 mark. One can initiate a buy at that point in time with the stop loss of 1250, and one can comfortably ride the rally. When it comes to Glenmark Life Science, now look at the trend again. It's very much intact. The recent low of March was around 670. Right now it's trading at 850. I think this correction can be a good opportunity to initiate a buy. Stop loss can be 820. and ride the rally. The targets can be 950 to 975 again. So yeah, these are training counters. One can always think of buying on decline.
Right, so do buy on decline for these counters that you're seeing now under some bit of pressure on the back of the news flow that is coming in now. Another counter that did see some pressure is that of HDFC Bank, and this especially after their Q1 updates that they did put out, seeing that deposit rate still being under pressure for them. The Bank of America has gone on to downgrade HDFC Bank stock to neutral from the buy call that it had earlier. It has trimmed that target price from 1,850 to just about 1,830. So they're seeing that 20 rupee cut that it is putting in. They are expecting the stock's risk reward to be in that narrow range, in fact, over the next 12 months or so. And a shallow rate cut cycle would also then delay that net interest margin recovery for HDFC Bank. Though we have seen that stock rally by about 20% from those February lows, and this is partially, you could say, driven by that index weight optimism that it had, the inclusion into the MSCI index, and that one really that drove that stock a little higher for some time. But let's talk about banking overall and whether that would be a sector you need to be keeping out, keeping your eye out for, especially in this whole rally that we've seen so far. Banks have somehow been, the underperformer. But let me first also get in Ambareesh Baliga. He's also joining us this morning. Ambareesh, thanks so much for speaking with us. We're talking about banks, and we've been saying for so long that they were underperformers. Then in between, we did have a good run when it came to the private sector banks, and we often then end up speaking about the valuations between the private versus PSUs, and the PSUs still do seem to have a better place in terms of their valuations. But getting into this earnings cycle, how would you be placing your bets between the PSU versus private and something like an HDFC Bank? Would you be buying something like that at this point?
See, first of all, as far as PSU banks are concerned, there's a huge valuation gap, especially if you go back the last 3-4 years. There was a huge valuation gap between the PSU banks, versus private. That gap was filled up in the last, especially the last 1 year, 18 months. And that was clearly dependent on the sort of earnings growth which they showed. The balance sheets were cleaned up. But at this point of time, I see that the net interest margins, the NIMs, have actually topped out for the banking space. And we are also seeing that because the way the markets have moved and the amount of liquidity which is flowing into the markets, and this is affecting the deposit collection by the banks. So clearly there would be margin pressure going ahead. So at this point of time, I will not really suggest one to get into banks in a big way. Although you could have, a holding an SBI, HDFC Bank for long term, no doubt. But don't expect any sort of performance from this space, at least in the short to medium term. And so I think it's best to stay away for the time being and wait for a correction
when it comes to the banking space, at least for now. And talking about banks, we do have Moody's that has given affirming its rating on Yes Bank and raising that to a positive from stable. They see that a change in outlook really reflects over the expectations of that gradual improvement that you're seeing in its performance. The improvement in deposits as well as lending franchises will go on to improve the profitability, they say, over the next 12 to 18 months. And the May upgrade rating, if the bank sustains that core profitability, will be because of its stable asset quality as well. So Yes Bank also will be another counter that you can be looking forward to. It's reacting there to this good news that is coming in from Moody's. But let me go back to Kunal then and get his view and get a couple of queries answered by him, and also requesting all of our viewers to do write in on our live feed, and we'll get your queries answered. Right now, I'm going to take up one from Debu K. He's asking your view, Kunal, on Hero MotoCorp and how should one be riding that one?
So if I look at the chart of Hero MotoCorp, I mean, this counter has not done much since almost June, right? It's been 2 months. The sideways consolidation is seen. The support is somewhere at around 54.50, and the resistance is at around 56.75 to 5700. I would rather avoid this counter right now, and I'll focus on the trending counters which are doing good. So for now, if he's a derivative trader, definitely he can think of creating a strangle with these levels in mind. But if he's a trending person who wishes to ride the rally, then I think Hero MotoCorp can be selected only above 5700. So for time being, it's a clear avoid.
So avoid a Hero MotoCorp is what Kunal is suggesting at this point. But also, let me go back to Ambareesh and ask him about pharma stocks. We did ask Kunal that earlier about, how is the pharma pack really holding out, whether, when we saw those big drops that happened on June 4th and even post that, we saw a couple of pharma names really holding out. And of course, you have that whole play between China and India within this space as well that has, turned out in favor at least of a couple of APIs within the pharma space. You do have the US regulator as well who's come in and, given a couple of approvals that we've seen. Zydus Life, for that matter, yesterday did get an approval from the US FDA for one of its tablets, that is used to treat chronic heart failure in adults. But a whole host of other stocks as well within this space seem quite interesting. But in terms of their valuations and whether this would be a right time to buy, would you take that bet as well, Ambareesh?
Yeah, in fact, pharma, what we have seen in the past few months is that we have seen an extremely good consolidation. I mean, they had moved well a bit earlier, but then in the last couple of months, we have seen an extremely good consolidation. And here again, I would like to stay with the top names like, for example, Lupin, Sun Pharma, Dr. Reddy's. I think these are the stocks which should be bought even at these levels. I think there's a decent upside.
Right, a decent upside still within the pharma space. So you'll have to pick and choose, but there are counters that seem interesting. Let me go back to Kunal, a couple of more queries. Then Partner Rajesh wants to know your view on Coal India. Today seems like metals are having a good day. At least we saw among your top gainers, you had the likes of a Tata Steel, a JSW Steel, Hindalco as well. But what does the chart really suggest for something like a Coal India?
Yes, Stacy, this counter is again coming out of consolidation since May 2024. So far, this counter was facing constant resistance near 500. Though we saw the high of around 525, but there wasn't a decisive closing and it came down. So yeah, I'm also considering 500 as a good breakout. One can initiate a buy above 502, 3 kind of levels. And the stop loss in that case can be 490. One can comfortably ride the rally till 515 to 520. If he is a positional trader, I would advise him to trail the stop loss and hold the position. I think 525 to 530 can be seen in the mid-term to long-term also.
Right, so Coal India and Bear definitely in the positive at this point, but also you could see, track those levels that Kunal was talking about. Another query coming in from Sandeep Potdar. He wants to know your view on well-spun specialty for, for long-term rather investment, or how many years does that chart really suggest that it, gives an opportunity for one to buy?
I'm just honestly waiting for this counter to give the breakout of 45. The clear reason being it's a trending counter, not even a single lower top, lower bottom since last 3 years. And if you look at the high of October 2023, that was at around 45.2. And it actually attempted crossing that level 3 to 4 times in this last 1.5 year, but it was a failure. Now it seems to be giving a fourth attempt to cross that level. Any chance if the counter manages to cross 45 decisively, one can initiate a buy. Stop loss in that case will be 40, and the targets can be as high as 55 to 60. So yes, it's a clear thumbs up for Wellspun Specialty.
Interesting. A thumbs up for Wellspun Specialty. I hope that answers that query for you. But Ambareesh, finally to you, the way we are seeing FIIs behave, at least in all of July, just the 10 days that have gone by, they've done some good buying. We could say $1.3 billion worth of equities that have been bought by FIIs. And in fact, compared to June, that number already is like halfway there, because in June it was somewhere around $3.18 billion worth of investments. So we seem to be already on that path where we are seeing FIIs flock in. We have not just in equities but also in with the bond inclusion. That one too has been something that has got FIIs talking about India. But are there any other kind of headwinds that we could face, from here? Of course, the immediate triggers could be a wait and watch because of the budget that we are waiting to hear from. But besides that, any kind of headwinds that you see that could make the India story a bit, a little more dimmer, perhaps?
No, see, I don't really see any other major headwind as such, except for what is within the market. And when I say within the market, I'm talking of valuations, because we have reached such levels. It's unimaginable even two or 3 years back that the stocks, especially the mid caps side of it and the smaller large caps, the sort of valuations they're quoting at was unimaginable. So at these levels, it's just difficult for me to logically, suggest, too many buys at this point of time. So, which actually means that finally the markets, if they come down, they would actually come down because of this stratospheric valuations than anything else.
So it is the valuation picture that seems a little bit of a blip, perhaps, even right now. We do have a couple of more queries that I would like to take in. One on Bajaj Finance, and that one really interesting at this point because, we are also going to see their numbers come out in a bit. But the NBFC space has been interesting of late with, all the regulatory overall that we've seen. Kunal, how does Bajaj Finance look at this point?
Stacy, entire year of 2024, the counter has failed to give the breakout of 7,400. There were 5 attempts done in this entire year, but it was a failure. And recently, if you look at the high, that was on 4th of July, counter made a high of 73.25, and again it came down. So I'm just patiently waiting for this counter to give a breakout of 7,400. On that breakout, the targets can be set as high as 8,200, but till then I would avoid this counter. It's been a sideways consolidating counter and there are many whipsaws, so let's avoid this and wait for the breakout of 7,400 to initiate the buy.
Right, so wait for that breakout of 7,400 and then look at this particular counter. Ambareesh, to you, always in the run up to the budget, we do see PSU names that see some good hectic buying. Yesterday though, we did see, after that good rally, we did see a couple of railway stocks that really took a beating, perhaps that profit booking kicking in. But how is one supposed to protect themselves then? Because we do know that we've been talking about how the government will go ahead and continue their focus towards railway and infra and all of those capex themes, but if you're looking at stock specific activity, rather, which are the sectors that you would think are much better guarded within the PSU space?
Oh, no, in fact, within the PSU space, I don't find too much of a value at this point of time, because if you look, all around, most of the stocks have become multi-baggers. Especially if you're talking about defense and railways. You have stocks which have become about 5-bagger to 10-bagger in a year. So I really don't see, this sustaining for too long. Possibly because of the budget, we could see some more upside because the momentum is there. But then at this point of time, I'll surely not suggest buying into this space. I would still go with, sort of defensive stocks, we discussed about Pharma. And the other space would be FMCG, where clearly I see a decent momentum building up. Because one, I think the budget will ensure more cash in hand as far as the middle class and the lower middle class is concerned. And at the same time, with the good monsoons, I think the rural demand will clearly pick up. So I think FMCG space is the space to be in. And IT, I think we should see green shoots out there. So these two sectors could be looked at, which haven't really moved too much, and the valuations are very, very decent.
Right. So valuations seem decent for the IT space, and now with the earnings, you might see some green shoots, is at least what Ambareesh is penciling in. And also, of course, the FMCG or the defensive that we see come into play when there was that much volatility. So the FMCG space is also something you can watch out for. And since we're talking about PSUs, let me get a query answered. There is one that has come in from Ankush Jagga. He he wants to know the view on RVNL. Now, there's a lot of news flow around this counter. They've won a couple of bids. They are going to be also, they won that bid with the Maharashtra Metro Rail Corporation yesterday. They've also got a letter of intent there from the Southern Railways as well. Ankush has bought this particular RVNL counter at 250 rupees. He's asking whether he needs to hold or sell, and what should be his stop losses and target.
So, Stacy, our viewer has already experienced the opportunity, the magic of holding the counters for long term. Now, from 200, the counter has already reached 615, and it's been possible. This wealth creation has been possible because of positional holding. So, I would just advise our viewer that rather than, having those goosebumps in the mind of booking the profits, he should comfortably trail the stop loss and hold the position. He might see drawdowns of around 5% because in the recent times, the counter has gone up too much. Just 4 or 5 days back, it was trading at around 410.15, and today it made a high of around 650. So these whipsaws will definitely come in, but nothing to worry about. The volumes are very strong and the trend is very much intact. Just forget this counter that you already bought in your portfolio, hold it for long term, and think of booking. If you feel uncomfortable, take out the capital, but remove just keep the other positions open for long term on this counter at least.
Quite interesting, because those stocks are something that have been, quite a favorite, we would say, among a lot of even retail buyers at this point. So a lot of these railway stocks have seen those good highs, and that's what we are suggesting even for this particular counter. But right now the markets are trading pretty much flat, we would say, but with that positive bias, the Nifty somewhere around that 24,350 levels at this point. So rather flat, we could say. Even the Sensex holding on to those 80,000 levels right now, but we'll have to wait and see through the trading day on how this really transpires. But we're completely out of time, so I'll have to thank my guest this morning, Ambareesh Baliga, as well as Kunal Rambhia from the streets, for giving us their time, helping our viewers with their queries, and also giving us some kind of direction towards where this market is really headed at this point. So thank you so much, gentlemen, for your time and helping our viewers as well. And to all our viewers, do keep continuing to send us your queries, because we do like to have them addressed on the show, as well as post us your feedback in the comment section below, and we'll try to see what we would like to get addressed from us. Follow us, of course, at the link at the bottom of your screen, and subscribe to Moneycontrol's YouTube channel for all your other updates. Come right back here. Today, of course, we're going to have that big TCS earnings, and we are going to be getting you the management as well as the post-earning analysis with our experts. So do come back for that right here on moneycontrol.com, as well as the Moneycontrol app. I'll see you again tomorrow.